What's going on, everyone? The next big move is unfolding right in front of our eyes, but it's starting to get ugly. Tomorrow is going to be the biggest day of the week as we have an interest rate decision, Powell's speech, giant earnings reports, and a whole lot of market-moving news. Stick with us today. We are in for a very exciting day tomorrow.
We definitely are, and we can see that the SPY fell down today. It closed down 0.26%. It actually looks very similar to yesterday's pullback. You know, both of these hourly charts look very similar intraday. Pretty much from open to close, there was downwards action as the day progressed. Now, as we can see today, the S&P 500 did close a little bit lower, and everybody's like, okay, well, why did the SPY end up falling today? I think it's because whenever we go and we look at the earnings calendar, 5 of the 6 biggest earnings today actually ended up dropping. The only one that really rose was SoFi. All of the others on the list here ended up dropping, and you know, you could name others at the bottom like Merck or P&G, but you know, United Health, PayPal, Boeing, UPS, and Spotify all fell today. And when I say they fell, the charts do not look very good. So we'll just go look at UNH. You know, right off the bat, this one, not a very good move, down 7.46%. We go to PayPal, we go to Boeing, we go to Spotify, we go to UPS. Every single one of these stocks had a pretty nasty move. I mean, UPS fell down 10%. So we're seeing some of these bigger stocks fall on earnings. Now, of course, this doesn't mean that the whole earnings week has to be negative. Some of these reports coming up tomorrow, like Meta and Microsoft and even Apple and Amazon, will have a much bigger impact on the market than a lot of these stocks will. But I think it's very important, though, to see how this sentiment is going so far, and it's definitely not the best start to the week, that's for sure.
Yeah, Spotify actually had its worst day in 2 years, and, you know, like you just said, we're not even to the main course yet. We still have Meta, Microsoft, Robinhood, and others set to report tomorrow, and we know that we're definitely going to see some big moves on this front, so it's definitely worth paying attention to. And, like, another thing to certainly keep in mind is that, you know, we have been seeing a fair amount of profit taking, not just today, but also yesterday, heading into this big week. It's not just an earnings week, but we also have a key FOMC interest rate decision. The market is at all-time highs. It has been cruising ever since its April lows, and I think a lot of investors are out there right now just wanting to secure a lot of the crazy gains that they got from these past few months, and honestly, I can't really blame them for that, especially considering some data that we're going to cover as the video goes on. But even another thing to keep in mind with today specifically is that there was some kind of weird China news too.
Yeah, it actually looks like Trump needs to approve to extend the U.S.-China tariff pause. So Trump's approval is needed, of course, for this. Bessent did say that Trump has the final say on everything that has to go on with the trade deals. But whenever I look at these, I'm a little bit worried because Trump, obviously, we know, is a bit of a wild card. Now, if he does approve this, I think this would be good for some of the China stocks like BABA, CWEB, KWEB, and others that we've been talking about recently. But nonetheless, this is a big piece of news whenever you're looking at trade right now. Everybody's been looking for them to extend, and it was expected to extend yesterday. Now this is carrying on day after day after day, and I wonder how long this is going to go. They have until August 12th, at least with China, to get this done, but I don't know, Mike. Things are definitely up in the air. And whenever I start to look at some of these China stocks, especially like BABA, CWEB, and a couple others, you know, we've seen a few big money plays on these, especially CWEB. There's been a couple big money plays with this one, and it is pulling back to a very key support here at like 42.30. And if a deal does come in, that could be pretty good for these China stocks. So hopefully Trump will sign this pretty soon.
What's really nice is that U.S. negotiators and China have come to a deal, so we just need Trump to give the green light there. So we shall see, but in a trading sense, we know that tariff news moves markets, so just keep this event on your radar in general. But another thing to definitely keep in mind is that we are heading into a time of the year where we generally see bigger, crazier moves, and that often goes with downside price action. The red line shows the volatility index for this year. The gray lines show what it normally does. When the volatility index index goes up, the market almost always goes down, and you see bigger, crazier moves. So we're heading into that time of the year again where things basically start to get exciting. And then on top of that, Tom, if we don't even look at the volatility index and we look just at, let's say, general market performance, we are heading into the first half of August, which is one of the weaker 2-week stretches of the year.
It really is. Like, whenever I start to look at, okay, how are some of these 2-week stretches of the year going? August does end up being a little bit positive, but we can see it's definitely towards the end of this chart, right? Of course, the market generally goes up, so a lot of these data points do look pretty positive. February, June, September, the second half of all 3 of those months are pretty brutal, but the first half of August is definitely towards the end here, and that is worrying, especially whenever you couple that with the VIX data that we talked about. I think that, those 2 data points going hand in hand is going to be pretty influential here. And even if, like, we don't see, like, let's just say August be the worst month ever, what if we see, like, a good dip the first week and then a slight recovery the second week? That could still show that, August might have been positive, but then again, we still had, like, some negative first week movement there. I know, like, whenever I look at the SPY right now, we're very overextended, Mike. And whenever I think about what is really controlling the SPY right now, we think about a lot of the bigger earnings this week, and there's just been so many stocks that have been really contributing to the S&P 500's performance, and a lot of them, of course, are some of the larger stocks out there, right? So we go and we look at, like, the S&P 500 returns and how concentrated they truly are. Like, the top 10 stocks have pretty much contributed to almost over half the gains here.
Yeah, it's crazy. So the top 10 stocks in the S&P 500 accounted for 54% of the market's gains since 2021. On top of that, these top 10 companies reflect a near record 39% of the S&P 500's total market value. So essentially what that means is that we are in a market where the top best stocks are completely running the show. So companies like Nvidia, Microsoft, Apple, Amazon, Meta, Broadcom, Google, Tesla, and others are contributing to almost all of the movement. And what makes this week so exciting is a lot of those companies are actually set to report earnings in just a few days. So that goes to show you how important this week is for the market. But then even on top of that, we are in a market environment where participants, traders out there are getting a little bit greedy, we can say. So margin investing has just absolutely skyrocketed, not only over the past few decades, but it has really accelerated over recent years too, and it jumped 9.4% in June to a record $1 trillion, and this is the largest monthly increase in history. So basically, we are in a situation where, yes, like when we look at the S&P 500 over the past few months, we can say, it has been just crushing it, and a lot of people are making a lot of money, but in the same way we see these beautiful up moves, when the market starts to pull back, it tends to be pretty violent. And because of, how overextended so many people are, like the moves are just bigger and crazier and more volatile. And I think this year was actually like a perfect example of that because, the down move that we saw in February and March was one of the quickest, most brutal pullbacks that we've seen in a while. But at the same time, what also came along with that was one of the quickest, best recoveries we've ever seen too.
Yeah, I just can't even believe how quick and really how high the market has really gotten here over the past few months since those April lows. Like, to even just say that the SPY was sitting at 482 and now it's all the way up to 634 is really mind-blowing. But we have looked at periods in the past where there has been great V-shaped recoveries kind of like this. We can even go back to like COVID, for example, right? That was one of the better V-shaped recoveries that we've seen. And even the last time that Trump was in office with a lot of his trade war stuff, we can see right here on the chart, there was a pretty nasty downtrend. But again, the recovery happened pretty quickly. So it seems like that we're having some pretty volatile markets right now. I do love to see the SPY moving the way that it has been recently, but I am worried in the way that it's pulling back now, Mike. I know I talked a lot yesterday about a lot of these key levels on the SPY, and we're going to get into them here right now. Looking at this key trend line, this trend line actually gave out today. Unfortunately, the SPY tried to hold the trend line intraday. We can see early on it held the trend line, but once it finally gave out right right around the mid-afternoon, we did see the SPY sell off a bit more, moving down to around that 634.50 mark at the low of day today. With the trend line giving out, I am a little worried that we will see a bit more of a downtrend come into play. There are some key supports coming up. I really like 633.50, which I'm marking off right here. I feel like that was a great point on the SPY in the past, but even more importantly, like as we zoom out, there are a ton of key levels coming up to the downside. I really do think that one of the better levels is going to be 629 to 630, where I'm pointing to right here. I think this is a great area of support, and I do think that SPY could end up bouncing there if we do see a pullback over the next few days. But I think the main thing to keep in mind for tomorrow is, okay, the SPY started to pull back a bit more today. If we re-break that low of day today around like 634.35 and we continue down, don't be afraid to adapt, right? There could be a pullback in the short term, and it would be healthy to see one, I would say, given how much the SPY has been running lately.
Exactly. And of course, like, the market is probably going to continue up at some point and make new all-time highs. But in a short-term trading sense, your goal is to profit off of what other people are doing and thinking. And we are seeing a lot of profit taking right now. And a lot of it is justifiable too, given how much the market's up and given the event the situation we're in right now. So especially if we do see those lower levels break, just like Tom said, I do think that's something that's certainly worth paying attention and probably adapting to as well, especially considering all of the historical data we just pointed out too. So yeah, let's definitely keep a very close eye on those levels. And then like another thing to keep in mind too is that a lot of how the market moves in the future, especially like over these next couple of days, will be determined on this FOMC event for tomorrow. So basically at 2 p.m. Eastern time is when we are going to know whether the FOMC cut interest rates or kept them the same. Right now, there's around a 98% chance that they are going to keep interest rates the same. So that's not really going to be that surprising. But what people are really going to be looking at is what Jerome Powell has to say about the economy and what his outlook is. If he seems very optimistic, it can be a very good sign. At the same time, if he's a little bit worried or if he has some concerns or if he, kind of alludes to keeping interest rates higher for longer, the market probably isn't going to like that too much. So basically, we're going to get a lot of fuel added to the fire tomorrow. 2 p.m. Eastern time and 2:30 p.m. Eastern time is the time to pay attention to. I would say 2:30 p.m. Eastern time is going to be most important because that's when Powell will speak. But like as we speak about like the future path of the economy, I saw some pretty interesting data today that basically showed that U.S. consumers are just piling into credit card debt like never before, where basically the total U.S. credit card debt hit $1.1 trillion recently. And Tom, this doesn't even include the buy now, pay later spending, which has been growing like crazy. And that's projected to hit a near record too at $117 billion.
Oh my gosh, 117 billion. I can't even believe we're even saying that right now already, right? Buy now, pay later hasn't been in for that long. I mean, maybe a little bit longer than some people think, but man, I can't believe it. You go on like a website, they say to use a firm to buy like a $20 product or something, right? It kind of makes me laugh a little bit, but hey, people are doing it, I guess. Nonetheless, this data is interesting, right? And look, as time goes on, money supply goes up, there's going to be more credit card debt, but to see it rise, I would say this steeply over the past couple of years is a little bit concerning in my eyes, and maybe shows the consumers are under a little bit more pressure right now than what would previously be thought. And what's also interesting is the Senate actually introduced a bill for tariff rebate checks after Trump's suggestion. So Senator Josh Hawley of Missouri actually introduced this bill today. We can see it does say that it would pretty much give people $600 per adult and dependent child, or $2,400 for a family of 4. So interesting there. It kind of reminds me of like the COVID stimulus checks, of course. I know Trump and Elon also floated like dividends from like Doge and other like money saving aspects as well. But nonetheless, I thought this was interesting. And, could you imagine if we had something like this right now, Mike? I couldn't imagine inflation.
My lord. So yeah, we are set for an eventful rest of the year, but especially next couple of weeks as well. And while we're on the topic of tariffs and rebates and credit card debt and all of this stuff, we might as well say this reminder that August 1st, this Friday, is the deadline for Trump's trade deals. Basically, he said that the trade deals for the rest of the world will be done by Friday, but China is going to take a little bit longer. So basically, this Friday, we should see a lot of action on this front as well. But besides that, Tom, how about we jump into the fun stuff, which are some setups and predictions. And a stock that is close on my radar is Spotify, ticker symbol SPOT, and it is to the downside. Like you pointed out, they were one of the multiple stocks that took quite the beating today on earnings. They had their worst day in 2 years. The stock is down around 11.5%, and it's on my radar for a potential continuation. Of course, it fell a lot today, so, of course, it's possible that it can just, bounce off of its levels today and, consolidate or maybe move higher. And, of course, anything's possible, but there's also a fair possibility that we continue to see investors, rush for the exit all at once and, just like bleed out of the stock. Basically, if Spotify continues to put a lot of pressure on its lows tomorrow, I will be looking at this for a potential bearish continuation setup. With setups like this one, it's very important to make sure you're actually seeing, continuous pressure on these lows and to see people just like fearfully exiting out of the stock, because you can help join in on the action, push it lower, and just ride that wave. If Spotify is just consolidating around and not really doing much, then there's no need to even force the setup.
Yeah, that was quite the sell-off today, down 11.55%. I'm definitely going to be looking for a continuation myself. Looking at it on the daily, it's turning over quite hard, so I'll definitely be watching it down as well. With my first setup, I'm looking at MicroStrategy, also to the downside. I noticed MicroStrategy had a pretty bad drop from open today, and I'm kind of looking for something like that tomorrow under the 390 mark at the low of day today. And I'm really eyeing up 390 because I love the way that they came up and tested $400 and rejected at the end of the day. But at the same time, there's also a lot of buyers stacked up at 390. So if we do see, let's say, a sell-off underneath this 390 mark, then go ahead and watch MicroStrategy down. Shout out to Bookmap for the X-ray vision. And something that was awesome today with Bookmap is we can see that there were multiple points where buyers ended up coming in, like right here at the 395 mark. Once they came in, MicroStrategy ended up bouncing up to that $400 point where sellers were stacked up and then rejected back down. Kind of funny how that works all the time with Bookmap, but that's why I love looking at it intraday. Nonetheless, if we break under 390, watch MicroStrategy to the downside.
Sounds good. Yeah, I will keep a close eye on these levels. MSTR has been quite a strong moving stock over the past year, so it's definitely worth keeping on the radar. Another stock that's definitely on watch is Baba. This one is definitely high risk, high reward though, so keep that in mind. Basically, Baba sold off very hard today, and it has been doing very well over the past few weeks and months. Like we pointed out earlier in the video, there was some news with China where it was like kind of good news but kind of bad news, where U.S. negotiators and China actually, came to an agreement for a trade truce, but we're all just waiting to see what Trump's going to do about this. If he can, say something that is more positive than what the market expects, this can definitely be looked at in a positive way. And if that happens, I think there can be good opportunity playing the up move with Baba. Even though it pulled back today, and even though it's been a little bit slow over the past few trading days, it has been doing pretty well in a broad sense. We've seen a handful of recent Chinese big money plays as well. And again, if we do see positive news from Trump here, I think it can make for a good opportunity. But again, high risk, high reward.
Yeah, it's a pretty crazy situation right now with the China stocks, but I definitely do like the opportunity here, and I could see Baba really breaking like that 124 resistance if we do end up seeing some better price action in the short term. With my next stock, I'm looking at KO to the upside here. I actually really like how Coca-Cola is holding its daily support, and something that I also like is that, as we can see in the bottom right, KO has a moderate correlation to SPY, and it generally has a mind of its own. So what I think is that KO is probably just going to do whatever it wants, and I love the way that it moved up 1.89% today, even after recently having earnings. So they're really holding this ground very well. And if we can see a good breakout above like 69.50 tomorrow, I'm definitely going to be watching KO back up. That's right around the high of day today. We can see at the end it did try to get back up to that 69.50 mark, but I'm looking at like some of the KO options that expire for this week. And obviously, of course, KO isn't like the most popular ticker out there, but like the 69 strike calls that expire this Friday were up 346% today. The 70 strike calls were up 300%. So there is some opportunity there in the options with KO. Of course, obviously, it's a bit of a slower mover on the general side of things, but not generally on the options.
There we go. All right, sounds good there. I will keep it close on watch. And besides that, Tom, let's jump right into today's momentum plays. And with the first one, we have Occidental Petroleum, ticker symbol OXY, to the upside.
I thought OXY had a great close. If they can break above that high of day around 49.60, watch them up.
With the next one, we have the Metals Company, ticker symbol TMC, to the downside.
A lot of these growth stocks sold off in a crazy way today. TMC is down 11.28%. If they break under $6.50, watch them down.
And then with the last one, we have NewScale, ticker symbol SMR, also to the downside.
Yeah, I've been loving SMR to the upside, but they are pulling back a bit here. If they could re-break that low of day at like 47.50, watch them down. The low of day was technically at like 47.63, 47.62, but I'm really watching 47.50.
Sounds perfect. So keep these plays for potential continuations tomorrow, if and only if they break through the levels listed. As always, prioritize trading in a smart, long-term oriented, sustainable way. Make sure you're protected above all else, and then worry about how to make money after that. If your risk is not protected, then you are not in a position to trade sustainably. Learn more about this and much more for free in the Key Lessons channel of the Stocked Up Discord. And besides that, Tom, let's jump right into today's big money trade, and we are looking at ticker symbol POET. This is a $375,000 big money play with the 6 strike call options for January 16th of 2026. So this one's interesting in multiple different senses. First off, it is with a smaller company than normal. This stock went from basically 80 cents to $6 over the past couple of years or so, which is very nice to see. It has been pulling back a little bit in the short term, but basically it's a company that designs and sells semiconductor products and services for commercial applications. And these call options are basically right at the money. They have a fair amount of time to them, so there's a low probability that these options are being shorted as like a covered call or anything like that. At the same time, when we look at this stock, today, the current call open interest was 315,000, and the put open interest was only 10,000. So there's definitely a big skew towards the call side. The stock has been uptrending. It's a smaller company, and it's definitely a trade that stuck out to me.
Yeah, this is a pretty crazy setup here with Poet. I do actually like how it's upcoming on a pretty big support as well. Like if we look at POET, this level very close to like $5.60 to $5.50 has yielded some pretty insane price action in the past. And if we could see a good bounce here with Poet, I think we could see a pretty good move back to the upside, of course. And looking at the big money trade, I know it's the 6 strike. It seems a little bit far away, but if we get like 1 or 2 green days, we'll be well above $6, given how well Poet can move to the upside. A lot of these green candles are pretty insane. Even if we just look at some of these random ones recently here, like, oh my gosh, like that's a 17% day there, multiple 10% days with Poet, right? And if we go to the bottom right, there's some pretty good stats that show that the average percent rise is over 5%. So it's definitely a big mover here. I will say it's pretty risky, but nonetheless, I love the support that it's on. And if it does start to break under the support in a significant way, I would probably look at cutting it, but there's quite a bit of time here, so you still have to give it a little bit of patience.
Yep, and like let's say in the worst case scenario where it breaks down past support and maybe it gets cut, it has all the way out until January, like you were saying. So like even if it gets cut, it can always be re-entered. And if someone wanted more confirmation, you could always set like an alert past like $7 or $6.50 or something like that, and then ride the trend once it starts to actively work more as well. So yeah, it's definitely a play worth keeping on the radar. I'm very excited to see how it ends up doing. But just so you guys know, I will be going on a trip for the next few weeks or so. So Tom's going to be you're going to be in good hands with Tom. He's going to be running the show by himself. So I just wanted to say that. But if you guys are new to the channel, definitely make sure to subscribe so you can get our videos recommended to you more often. It takes us multiple hours to make these videos every single day, and we cover literally everything you have to know about the stock market, whether it be important events, earnings, key historical data, SPY levels and analysis, setups and predictions, and basically everything you have to know. When you subscribe, you'll get our videos recommended to you more often. But we also want to give a giant shout out to today's member of the day, Luncheon, who hit it out of the park today. We can see he had a whole lot of gains with Advanced Money Dispenser, which is awesome to see. Huge shout out to you, Luncheon. Keep up the great work going forward, and that is not too bad of a day, so keep on rolling. If you guys have not tried out Bookmap yet, definitely check it out. It's the perfect week to try it because of all of the crazy events and moves we have going on. You can save quite a bit by using the StockedUp link down below. It's awesome. It's the X-ray vision of the stock market, and you should definitely try it out at least at some point, and this week might be the week to try it out. So definitely check it out. But besides that, thank you all so much for watching, and let's crush it in the market tomorrow.